What's up, everybody? I'm Scott Melker, also known as the Wolf of All Streets, and I'm here today with David Weisberger, CEO and co-founder of CoinRoutes. David has over 30 years of experience in market structure, quantitative finance, and trading automation. He built the first program trading system for Morgan Stanley and designed trading systems for Salomon Brothers and Two Sigma. As I mentioned, now he's running CoinRoutes, providing smart order routing and consolidated market data for crypto asset trading. This makes him the perfect person to help us sort out what's happening in global and crypto markets. David, thank you so much for taking the time.
Thanks, Scott, for having me.
So I'm curious, from the widest view, what is your perspective at the moment on the crypto market and the Bitcoin correction that we're seeing?
Range bound. I mean, I know it's a very simple word, range bound. But the reality is there's meaning behind that. There's a bunch of cross currents that have gone on in the crypto markets over the last 6 months. There's been significant demand for underlying demand for both Bitcoin and Ethereum for totally different reasons. Ethereum, lots of excitement on the upcoming, well, hopefully fork to the new protocol, and Bitcoin because look, there's a global macro picture out there that people don't want to talk about as much anymore. But the reality is, there's lots of monetary printing going on. There's lots of spending going on, and it's not really manifesting itself in any of the typical inflation hedges. We heard all about Bitcoin demonetizing gold in the first half of the year. Now no one's talking about it, but nothing really has changed. The other big cross current that's gone on over the last 6 months is, not surprising, the rise of meme coins. And so we've seen all sorts of diversions basically I call them the Ralph Cramden coins. For anyone who ever goes back and watches old episodes of The Honeymooners, Ralph Cramden was a bus driver played by Jackie Gleason. And while I can't remember how politically incorrect it probably was, and I'm sure it was from that era, the fact is many, and I mean many, of the episodes had to do with get rich quick schemes. People love to get rich quick. And the reality is Bitcoin, which is pricing in somewhere around, if you believe it, 15 to 20x appreciation from current levels, isn't fast enough or big enough for people who want to see, 100x or 200x or 500x appreciation from something that has no particular reason for existing other than the fact that people believe, well, they can get these sorts of returns. And so we saw the same thing in the ICO era. We're seeing it now with meme coins on swap markets like PancakeSwap. It's just those cross currents are contradictory to each other, because the money that might flow into crypto from at the top big cap level, like the Bitcoins and the Ethereums, are being siphoned away into other coins.
And it's incredible to now see Doge as one of those large cap coins as a result simply of being a meme coin and that FOMO and mainstream recognition that you're talking about.
Yeah, I mean, Doge is an interesting case because one could make an argument that what's the difference between Dogecoin and Litecoin? One is a fork of the other, and what's the use case for either of them in a world where Bitcoin is, if you believe you're going to end up with a Bitcoin standard, then what's the use of other coins that the sole purpose for existence is to be, I don't know, silver to Bitcoin's gold, that sort of idea? I mean, what's the difference, really? I mean, it's very hard for me to conceptualize why there should be more than one store of value coin. I totally understand DeFi. Well, I don't understand all of DeFi, but I certainly understand the importance of DeFi and many of the tokens, and more importantly, the underlying technologies in DeFi. And I certainly understand the use case for Ethereum and why Ethereum, as a smart contract platform, can generate value for its native token, which means I'm not a Bitcoin maximalist. But when it comes to store of value, just purely something that holds its value, it's hard for me to understand why there are others, except for other specific niche cases. And there are a few, but generally I don't understand it. And that's not to say it's wrong. It's to say that I don't get it.
I would hate to have people investing in Doge because they believe it's a store of value. But that is a narrative that I have seen, sadly, that is going around for sure. So I'm curious, you said obviously that people in crypto are generally impatient. They're looking for a larger gain. 10, 20x is nothing if I can do 100 or 200, right? Do you think that Bitcoin still has another 10 or 20x in it? What do you believe are the potential targets for 2021 or the next cycle? And as a corollary, do you believe that this cycle has topped or that we're part of a larger cycle still?
I don't want to answer the first question particularly, but I'm going to. The second one is an emphatic no. So let's go through why I said that. I believe Bitcoin trades like an option on its own adoption. I've said that many times. I think that at the end of the day, if you're a monetary historian, and some of us are certainly hobbyists when it comes to monetary history, people who have read, whether it's the Bitcoin Standard or it's like Cowrie sells, there's lots of different books on monetary history. Some even are taught by professors in school, although very few of them these days seem to actually care. A few things. That the world existed until money was basically created. We created one of the largest single expansion in standard of living. But the reality is we went from cowrie shells and some offshoots, like one of my favorite one is in the Bitcoin Standard, talks about the big rocks on the Isle of Yap. But the fact is there's something to provide a non-manipulatable store of value to base transactions off of. So whether it was shells, rocks, or ultimately gold or silver, for thousands of years, there was something. Since 1971, the world's had nothing. Now, when you consider 5,000 years of recorded human history, the last 60 years or 50 years is really a pretty short time. And so people who declare, that the world of fiat currencies, where you actually have nothing backing your currency except for the military and the faith of the governments who create them, to declare that game over, that we know that that's the right way, just are not really accurate in historical epoch terms. So understanding that, the question becomes, will something arise to become a global store of value to at least be a counterweight to governments in the way that gold was a counterweight? Governments have spent too much, needed to come up with the gold one way or another in order to be able to finance what they were doing. Maybe not immediately, but eventually. The reason Nixon closed the gold window is because after the Great Society, combined with the war in Vietnam, the U.S. could not afford it anymore. And we were losing all our gold reserves and said, no, we don't want to do that, so screw it. We'll just be the dollar. And we are the only real superpower out there that's involved economically worldwide. At the time, there was the United States and the Soviet Union. The Soviet Union was a military superpower, but decidedly not an economic superpower. So it was a mono-power system where we were able to exercise that power and did. And it's created enormous benefits to America. I mean, let's face it, we've been able to import our standard of living for 50 years, and it's been awesome. If you're in this country, people take it for granted, but that is the case. But to get back to Bitcoin, it's an option. If there's going to be a counterweight, if there's going to be that global store of value, which I suspect there will, because power abhors a vacuum, then the question is, how will that manifest? Will gold be reborn, as gold bugs would have you? I doubt it. I think in the digital age, we need a digital asset. We need one that is completely impossible to counterfeit, one that's totally verifiable via computer, one that is easily divisible, one that is portable, one that can, be as I said, verifiable. All of the sorts of things that Bitcoin has. And when you go through the characteristics of money, Bitcoin literally is basically perfect money. The only thing missing, and it's not missing, it's only partial, is acceptance. Now, what is acceptance? Acceptance is people say, screw it. This is what it's going to be. I'm going to accept this and I'm going to move on. And the question becomes, if it gains that acceptance, at what price does it reside? And the answer, I think, can easily be determined in two steps. Step number one, what's the monetary premium afforded to gold today even? And step two, what should that monetary premium be for a digital store of value? Well, the monetary premium for gold is pretty easy to determine. The simplest way is to use the gold-silver ratio. Arguably, post William Jennings Bryan cross of gold speech in the 1800s, over the next 50 years, gold demonetized silver. Gold's ratio to silver in the Earth's crust is 15-1. Gold's ratio to silver's price for thousands of years was 15-1. Ever since gold demonetized silver, the ratio is banged between 70 and 100-1. So what does that tell you? That tells you 3/4-ish of gold's value is its monetary value. That pegs it at around $9 trillion. $9 $9 trillion is about 15 to 1 appreciation from Bitcoin today. Bitcoin becomes digital gold. It's worth $9 trillion. So that's that's your base level. Now, if you listen to Pomp or Mark Yusko from Morgan Creek, or you listen to Max Kaiser or other people who talk about the Bitcoin standard, they say, well, wait a minute. The global money supply indicates that the monetary value of gold should probably be a lot higher because a lot of money has been printed since, we basically achieved that plateau several years ago. That's a fair point. So there's certain upside there, but you got to get to first principles first. So the first stop for Bitcoin, if it succeeds, i.e. option, is probably a 15 to 1 rally from where it is today. So now your question is, what is its likelihood of success? Well, the market, more or less is pricing it at about 7%. That's what it says. If you believe that the odds are higher, buy it. If you believe the odds are lower, I wouldn't short it, but because you don't want to be wrong in that case because of the asymmetrical return, but avoid it. So it's that simple. I personally believe the odds are much, much higher than the 7. And so that's why I'm bullish.
I mean, so that puts it between $500,000 and $1 million pretty easily just by those metrics.
Right. But now you talk about timing. 2021, 2022, do we get to that level? I doubt it.
Does it matter?
Then again, no, it does, because when you start talking about why do I think it's more likely? Well, yeah, El Salvador is a tiny little country, but the fact that a sovereign government has adopted it is a big deal. MicroStrategy is a small company, basically. The fact that corporates are starting to adopt it is not a small deal either. There are insurance companies out there. There are other people. What hasn't happened, and is probably the next big domino to fall, will be when the investment consultants, the ones that advise pension funds and corporate treasuries, or not corporate treasuries, investment managers around the world that make up what's in a 60-40 portfolio, declare Bitcoin an investable asset. Not an alternative asset, but an investable asset in a traditional portfolio. I don't know when that will happen. When that does, that's your next leg up.
ETF, in my opinion.
Well, if the ETF decision is a different case there, and this is not a controversial attempt. This is difficult for me because generally I believe that most of what the SEC tries to do until some of the recent things make sense. I think that the refusal to approve a Bitcoin ETF is arguably irresponsibly bad from the SEC's perspective. It's 100%. Not just bad, it's irresponsibly bad, because investors want to invest in Bitcoin, period. There's all sorts of data on this, right? So what are the alternatives? If you are grandma with a retirement account or with your mutual fund account, that's what you have, right? If you're sitting with an account in a major brokerage firm today, you can buy Bitcoin via the Grayscale Bitcoin Trust. No offense to Grayscale. They took the legal structure and they allowed people to invest in Bitcoin, and I think that's great. But having the only legal method for people to invest in Bitcoin through a brokerage account be something that can trade at a 15 or 20% premium or 15 or 20% discount is ludicrous. When you have something called a Bitcoin ETF that once approved will immediately trade within 1% premium or discount at all times. Oh, by the way, it will trade more liquidly. By the way, the Bitcoin ETF would be most likely marginable, whereas GBTC is not, et cetera, which means it could be loaned. There's all sorts of reasons that it will be better for people. The reality is investors are undeniably hurt by being pushed into something else. Plus, one of the biggest IPOs of the year was for Coinbase. Investors can buy Bitcoin via a totally non-regulated entity. Well, what's the solution? If Gary Gensler would actually listen to people like me, and I've tried to talk to him, I haven't gotten his attention yet. The reality is he would know that his single best way forward is to approve a Bitcoin ETF, but make it contingent on a very simple thing. Tell the issuer that the exchanges that are providing pricing data have to agree to some level of oversight, at least data transmission, in which case he gets what he wants, or at least some of what he wants, and he helps investors at the same time. It's a clear win-win. Yet that seems to be a very difficult concept somehow. Now, I understand his reasoning. His reasoning is he has a single button to push. And once he approves a Bitcoin ETF, he loses all leverage with Congress to say the SEC should be able to have oversight over Bitcoin and over crypto. And I think that's his fear. He's holding it out as in a political realpolitik game and letting investors be hurt by that. And maybe he thinks people don't realize that's what he's doing. Well, guess what? This is public, and I'm telling you, that is either what he's doing or he's nowhere near as smart as I know him to be. So yeah, I have a serious issue with the Bitcoin ETF lack of approval and continually kicking the can down the road, because I think it's a really bad decision.
I agree. But when we talk about this wall of money from endowments and pensions, that might be the vehicle that they require, even if they're interested in exposure to the asset now, in my opinion.
Yeah, I mean, it's certainly, it would legitimize it. That's true. But I think the real wall of money is already happening. I mean, people go into alternative investments significantly anyway, so you can get there. There's all sorts of crypto funds being started and there's lots of interest in it. The real issue, though, are the consultants who tell pensions what are allowable in their main portfolio. In their main portfolio, it can be stocks, it could be bonds, it could be precious metals.
Yeah.
If Bitcoin were part of that pari passu with gold, then all of a sudden it opens up a tremendous, I don't like the word of wall of money, because it has the assumption that it's going to come crashing in the market immediately. It doesn't work like that. It starts moving. It's like the old expression, slowly then suddenly, but it's slowly, and the suddenly is still stretched out over months or years. It's not stretched out in days, which is what the crypto community seems to always assume. They assume everything happens in days. And the reality is it shouldn't have to be that way.
So looking at Bitcoin trading in this range, which we both agree is firmly range bound, 30-ish to 42-ish or so, what would you be looking for technically or from a market structure, standpoint, to give you confidence it's ready to head in either direction?
Well, I mean, look, the thing I've been looking at most closely, and we're kind of getting to a tipping point, I think, when Bitcoin was in the 60s, there were very, very high funding rates and bases. Now, what do I mean by that? I mean, in all of the liquid derivative exchanges that trade outside the US, the exchanges publish in real time the funding rates, and you can see that, like right now, for example, Bitcoin's derivatives are trading about the same $10 to $20 below where Bitcoin spot has been. It's been that way for 5 weeks now. The funding rates have been negative to very low. It's negative right now, almost across the board, for those 5 or 6 weeks. What does that tell you? It tells you there's very little open interest of long speculation. There's almost none. There's more short speculation, but still not huge numbers. So the reality is there's not a lot of speculation out there, which means that if a sell-off happens, which of course can happen, the amount of liquidation of longs is going to be negligible, as opposed to enormous during the sell-off that happened at the end of May and into June. And as a result, there's less. It's like having, a forest fire when there's lots and lots of brush and little trees and all sorts of fuel near the big trees. Well, the forest fire rages out of control. When there's no brush and nothing, no tinder, the fire is much harder to start. And that's really kind of the point. So the downside action, really barring something massively fundamental that we haven't conceived of, seems to be more limited. The upside, there's nothing cushioning against the upside. The shorts, if their big buyers came in and there was big fundamental news, the rally would be as epic as the last several rallies that we've seen. And I think that you could see a rally to 100,000, but it's going to take a spark, and that spark might not come for 6 months. I don't know.
Right.
And that's really kind of the point. So that's when you look at the range, I'm always looking to see how much speculation there is. I mean, part of it is, in a way, one of the most bullish things today is, Dogecoin flirting with falling below 20 cents. And I know that sounds ridiculous, but as the market caps of some of these meme coins start to fade out and people realize that maybe it's not going to go higher on the next rally, that could be a big deal. Now, that's totally different than altcoins in general, because people who look at all altcoins being created equal, I have a problem with, because there are plenty of altcoins that have actual use cases, actual networks being built, actual things that make sense. Now, whether the tokenomics make sense or not is a case by case basis. But it's really hard to make an argument that being involved in DeFi or something like Maker's a good example. It's cash flow positive. There is value in the token. There is value in the ecosystem, and there are people out there who will do that. I don't know what its valuation should be. That is not my job, but I can say that to put that in the same breath as Shiba token, which is was written in a weekend, and a lot of people decided to get together and make something worth a huge. Immediately they created billions of value, really quickly. I find that very difficult, but that is a big issue inside the crypto space, because all value is really not. It's not as easy for people to get their heads around, and there are certain very good analysts who do that. That's not my job.
I mean, we have like 10,000 coins now, which has probably doubled in a year. 9,000 of those or more are going to zero eventually.
Probably.
They are.
I mean, at the end of the day, I would have said I was actually surprised by how many of the coins that I thought were going to zero from the 2017-18 boom managed to stay alive and actually get back to all-time highs, earlier this year. So I'm always surprised by people's gullibility. But the reality is that we're looking at a asset class that it's still incredibly early in its development.
So what are you building at your company that's interesting to help facilitate all of this?
Well, we are completely focused. Our company cares about best execution. Best execution, not in the academic, regulatory sense of, oh, did I do a good job? But in the sense of, I want to buy this. I want to buy it as cheaply as possible. I want to sell it. I want to maximize my returns. I want to be able to trade intelligently and move positions as efficaciously as possible. That's what we do. So, we focus with lots of data. So we have the full book data of virtually every instrument out there. I mean, we trade most of them. We have built derivative algorithms to trade the derivative products, and we save our clients a fortune on that. So anyone who's trading through us is probably going to pay fees that are net of fees, probably save 5 to 7 basis points trading perpetual swaps. So, which is not a trivial thing when when you're trading in and out. So that's what we care about. We care about improving the asset class to get more investable, because the cheaper it is to trade, the more volume there is behind it, and the more liquidity people can find, the more likely institutions will say, okay, this becomes an investable asset class. So our contribution marginally to the ecosystem is to help things really become more investable. And that's what we do. But that said, our clients are people who are trading crypto already or trading derivatives already, and we save them money.
That makes perfect sense, because at the end of the day, it's a maturing market that's still nascent and inefficient.
I mean, really? There are still people who believe you should go on Skype or Telegram to shift a big block of Bitcoin, which is laughable. I mean, it's laughable. The reality is, I joke about it because I've seen this movie before, right? I was very involved with equity algorithms. Microsoft, I remember back in the day when the only way you would trade Microsoft literally was by picking up the phone and calling a broker and saying, I got 500,000 shares of Microsoft to sell. What's your bid? And the broker would say something like, I'll tell you what, I'll buy 100,000 from you at this price, which is a quarter below the current market, and I'll work the rest of it for you. How does that sound? And charge a commission for doing it. And the customer may haggle and say, oh, take 150, take whatever. But anyway, it was done over the phone, and that's what happened. Today, you want to trade 500,000 shares of Microsoft, you stick it in an algorithm, you hit the button, the algorithm places 100, 300, 1,000 share orders like machine guns to all the various exchanges, gets it done probably quicker than the old way, certainly for a lot less cost, right? We all understand that's true. Well, our clients can do the same thing with Bitcoin, Ethereum, Chainlink, Polkadot, doesn't matter. And that's the point. The point is you can trade intelligently, quickly, but in small pieces algorithmically in a way that people can't see that there was a big buyer or a big seller in the name. And that's something that has to happen. But right now there are people running around still on LinkedIn who says, well, I got big buyers, you want to sell at a discount, or big sellers, you want to buy at a discount. It's like, great, I'll buy at a discount all day long, because I know that I can then sell it and just make a quick arb profit off of it by doing it. The reality is there are people who still believe that. Until that's gone, the market's not mature. Until we see some level of industry cooperation against tactics like layering the book or spoofing, there's going to be people who will distrust the market. Now, the reality is spoofing in the electronic markets is really complicated, because if you do it and there really is a big buyer and you were spoofing by putting an offer that wasn't real, they might buy it from you. And now what do? Now you're short, and all of a sudden you're short and you're wrong. And it's very, very costly. So generally what happened, why spoofing in equities stopped, was because of smart order routers, and they became ubiquitous, right? Because people were able just to grab that liquidity and move past it. The same will happen. The same is already happening in crypto. So spoofing, layering on the big coins is getting less and less, but it's impossible to put a finger on it and say, okay, it's never going to happen, because in every electronically traded asset, there's always bad actors, always people who think they can do something to get away with something.
Yeah, interesting, because I think your average retail trader comes into the market and sees a huge sell wall and says, oh man, I'm terrified somebody's trying to sell a lot, and doesn't realize that they're actually holding price down to buy a lot, and vice versa. Obviously, there's a huge bid, I've got to buy. Nope, they're just propping price so that they can sell. And that's generally what's happening in the crypto markets. Spoofing, certainly
Scott,
on lower liquid.
I got to tell you a story. You got to hear the story. So, I'll never forget this, because it was, we're talking in the 90s. I was in program trading, as you mentioned, and I happened to be tasked with the goal of automating or building better trading systems for the OTC trading desk. So I'm sitting there as I'm doing, talking with one trader about how they do things, and a new class of recruits are being trained on how to trade. And the very first thing they were told, now this is in the 1990s, there was no laws against this back then. The very first thing they were told was, if you get a big buy order, what do? Put an offer out on NASDAQ and make it look big. Put it a little bit above the offer, because at that time the systems to accessing was there. But that was literally what they were told to do. They were told, if you're a buyer, offer out on NASDAQ so the world will think that we're sellers.
Yeah.
Now, I don't know that it actually worked as well as they thought it did, but that was literally what they taught day one of trading interns on Wall Street. So it's kind of funny when people go, really, people might do that in crypto where there's no regulation? And it's like, well, it was day one what they taught people how to trade. So why should this surprise anyone? Does it work or not? Well, probably not as much as you think. But the reality is this is not like new.
Yeah, makes perfect sense. It is interesting to hear, though, that it was being taught, because anyone younger knows that it's illegal to do in equity markets at this point. Like you said,
sure.
It's wild west in crypto. Go ahead and place your bid, but you can't do that anymore on Wall Street.
No, I mean, look, it's a general rule. And I had these conversations with regulators back last decade, was what they wanted to make. I don't like the word illegal, because it's really more, I don't know whether it's law or what by rule, but certainly what they want to discourage via regulation people from doing is ever placing an order that's the opposite of your intent. They want to make sure every order placed in the marketplace is legitimate, or the word that they use is bona fide. That is the goal here. And so to the extent that you're a buyer, then you should be bidding and not offering. To the extent that you're a seller, you should be offering and not bidding. It's really that, that's simple.
Yeah, if you place an order, you intend to fill it, the most basic level. So I'm curious, what do you think is still lacking in the Bitcoin crypto market that's needed to have the full infrastructure to give confidence to institutions, huge buyers and sellers to confidently enter this market?
It's actually interesting. Not a lot anymore. It's really gotten to be significantly improved. I mean, even the number of candles that you see that are straight up or straight down has dramatically decreased. I mean, it happens, but the markets are actually pretty mature, more mature than, there are plenty of small cap stocks that are more volatile than crypto. Certainly lately, I mean, lots of stocks have been more volatile than crypto. And the electronic markets, the only real issue with some of them are they're not really held to a standard in terms of downtime and uptime that other markets might be. So there is really a need for somebody to help navigate those markets, because like there was a day in May when not one, but seven, literally seven of the liquidity providers or markets had outages during the same day. And you can probably figure out what day it was. But the funny part is that a lot of them weren't, they just went down. In at least one case, they were publishing quotes that were 20 minutes to an hour old on one channel, but they had another channel where they were publishing the accurate quote. And that, of course, causes systems and humans to get very confused, because which is real, right? So there's lots of issues that happen occasionally, but the frequency of those events is much, much lower. And almost every day in fact, I can say this categorically, for many more hours than the equity markets trade per day, the crypto markets trade without incident per day. The difference is crypto's 24/7. So therefore trades almost 4 times more per day, and more than 4 times more when you count the weekends than the equity markets do. Plus, it's harder to have scheduled downtime because it's always going to inconvenience somebody because they're 24/7 markets. So institutions should understand that yes, the markets were working pretty well. It's just a question of making sure that they are measuring what they trade, right? Find reasonable benchmarks and firms that can help them, and make sure the technology that they're using is able to operate across the market and not just with one particular exchange or one particular broker.
Makes perfect sense. So I know we're running out of time here. 15x from here is about $500,000. So can we have a second conversation when Bitcoin hits 500?
Well, we could have conversations. I think the real question is breaking out of this trading range. Whether we'll get to a 20% probability and get into the 6-figure range, whether that will happen this year, or whether we've lost the cycle and we got to wait for the next halving to get there. I don't know. My best guess is it will happen this cycle. Maybe next year, maybe this year. 500,000 is one of those things that, as Bitcoin demonetizes gold, there's going to be a lot of complaining out there, and we've already seen it. We didn't talk about China, we didn't talk about the environmental FUD, but there's lots of narratives that are being marshaled by people who are threatened by Bitcoin now to try to stop it. And I'm not just talking about Elon Musk, who can tweet lots of different things. The reality is everyone was talking about the environment not too long ago as the biggest reason to hate Bitcoin. But now that China has basically banned Bitcoin mining, and Bitcoin is now far more renewable of an energy, using far more renewables than pretty much anybody else would have ever imagined would be possible this quickly. You don't really hear that much about it, except for stupid stories like, anecdotal reports of Seneca Lake, which is mathematically absurd, right? Stuff like that. So, we're looking at a world where there's lots of narratives being marshaled. And to me, that's actually a very bullish sign, because it shows that there are people who are actually threatened. And then there are others who are like, you know what, it just doesn't really matter. And Bitcoin is something that, a free market should basically have, and so be it. And China does not want a free market. And so it shouldn't surprise anybody that the least free, economically controlled market on the planet is the one who pushed it aside. The real question will be the more free markets, will they really adopt it, or at least allow it to get adopted? That's the question.
I think the Seneca Lake story is probably the most egregious of this entire cycle. I actually have been vacationing there for years. I'll be there this summer. The average temperature of that lake is 67 degrees, and it's currently probably about 67.5 degrees. And they're reporting that it's as hot as a hot tub because of Bitcoin mining. I would not want to swim in a 68-degree hot tub.
Well, I mean, the number of gallons of water and the amount of cooling water from that's going in, it'd be the moral equivalent of going to a large swimming pool, taking an eyedropper of hot water, dripping into the swimming pool, and assuming it's going to heat the pool.
There's a submarine training center in the middle of the lake, because it's one of the deepest lakes in the United States. The entire notion is so absurd. When I read that, I was like, all right, we're good. None of this news matters ever again, because it's reached a point of absurdity that it's not even worth reading.
I mean, the real problem with it was that I actually saw economics professors, one of which is a friend of mine, tweeting about it, because it's as if it somehow proves something. But it really, what does it prove? It literally proves that there are people out there who are just so desperate to say anything negative about Bitcoin for whatever reason that they'll latch on to things that are completely undocumented. And that shouldn't surprise anybody, because let's face it, how many people in the public care to read an article? They just look at the headline and say, ooh, and they tweet about it and they talk about it with their friends without ever reading it. So that's not going to surprise. It shouldn't surprise you, or anybody for that matter.
No, it absolutely shouldn't. But I think we can all be confident that we'll get past all of these fake stories, which kind of recycle every single time Bitcoin price drops, right?
Yeah, it is. It's interesting. My favorite one though is listening to one of the head guys at one of the FBI's divisions talk to a financial audience, and someone asked him a question about Bitcoin, and his first response was, "Oh, we love when criminals use Bitcoin. It's
That's
awesome.
easy.
So much better than when they use cash or prepaid debit cards or other sort of
Public
stuff
ledger.
like that, because we can actually trace it." And so you've seen actual real bad guys getting caught because they use Bitcoin. Yet there's always the congressman or news anchor saying, "Oh, look at this ransomware attack. This proves it's used by criminals." It's literally the exact opposite. But
you think the criminals never found a way to perpetrate crimes before cryptocurrency was invented. So where can everybody follow you after this and keep up with what you guys are doing and check out the product?
well, I mean, I am at Dave Weisberger on Twitter. CoinRoutes also has an at CoinRoutes page, and we'll be upgrading our website this summer, and look forward to a retail product that we'll be announcing toward the end of the year for people who really are interested in being able to get better executions on their exchanges that they have that they're using for their own trading. So that's what we're going to be doing, and it's just something we're pretty excited about.
Will that be via API, or will it be as
Well, we
a
already
sort of
have
a
the
broker?
API version. No, we're gonna have a web enabled and a mobile enabled platform, web first, in partnership with with a major with an interesting partnership that we'll be announcing in the not so distant future.
Thank you so much for taking the time to do this. Really, really appreciate it. Very enlightening.
Thanks, Scott.